Yeah, so one of the questions that I get asked a lot recently at Abra is what's going on with institutional money coming into cryptocurrencies? What's happening with exchange-traded funds and index funds that are trying to make it easier for institutional or larger accredited investors to put money into crypto? So I think that there's a few things going on. One, we recently had the Gemini Winklevoss ETF was rejected for a second time by the SEC for their new ETF. And we've had some comments on CNBC about the lack of institutional money coming into crypto. So our take is that there's a couple of things going on at the same time here that are going to cause significant institutional money to come into crypto in the next 12 months. So let's break it down, right? So the first thing is that institutional money that comes into cryptocurrencies needs to basically have a way to manage, right, custody of funds. Our belief is that institutions are not going to leave cryptocurrencies on exchanges, nor should they, right? Nor should you as a consumer. You should be holding your own private keys. And as a retail consumer in an app like Abra or in a hardware wallet, institutional money is going to be managed via a team of custody experts who understand PKI and how to manage private keys. And that's the point that I was trying to make, which is our belief is that companies on the buy side that are going to manage positions for customers are going to do key management inside the firewall themselves. They're going to go out and hire a team of 5, 6, 10 people who are going to be experts on how to secure cryptocurrencies. And what we're seeing now is all of these companies are putting these custody solutions in place. Most of them are afraid of delving into crypto until they have worked out these custody issues. And our belief is that most large institutions will not outsource custody. They're too afraid to do so, taking on the liability of hacking and whatnot. And so those pieces are being put into place now, and no institution is going to make that massive investment unless they're actually intending to dive into crypto. So that's actually a very good sign. The fact that I see all these institutions talking about how they're going to deal with custody tells me they want to get into crypto. So that's one really good sign. The second is, I think that it's premature to be thinking about large-scale ETFs when the size of the kind of crypto asset class in terms of dollars moving in and out in the Western markets is still relatively small. If you look at investments in Japan, for example, they make up 45% of all exchange activity in crypto, just in Japan. Okay, so what that tells me is that the US markets have not matured enough to be ready for the kind of ETF that is being proposed. But that doesn't make it a non-viable opportunity, and my belief is that eventually the SEC will acquiesce and agree that this is something that investors should be doing, or should be allowed to do, I should say, and will bless an ETF or other index funds at some point. But we're already seeing index funds popping up that simply allow people to invest in baskets of currencies. And this is something that Abra is looking very closely at as well. Our synthetic currency model lends itself really well to creating mashed up versions of different cryptocurrencies into one effectively index coin. And so that's something that we're taking a close look at. So all of these things point to a very rosy picture for institutions and large accredited investors getting into cryptocurrencies over the next 12 months, in our opinion. Thanks for listening.